These cases of monkeypox are popping up everywhere. Hey everybody, hope you had a great trading week. It was a bloodbath, as we're all aware. There were some really good movers out there, and there's some really great opportunities to get some shorts off. We're going to go through a lot today. It's going to be a little different than we normally just come up with ideas. We're going to focus more on what's going on, what's going to happen next week, and signs to look for a bottom. Also, I want to get into ideas like this just so you're aware of them. Like, for example, this is monkeypox, right? This is the new thing that we're all supposed to be worried about. So I just want you to focus on ideas like this and just think about them. In other words, what is something like this going to do to the market? Are we going to see a pullback down to this 9.25 level? I don't know. I know that they're stockpiling smallpox vaccines right now. This company makes that. If you looked at your social media feeds today, you'll see or any media feeds, and I'm sure it'll be in the news cycle this weekend, these cases of monkeypox are popping up everywhere. They make a smallpox vaccine which actually slows down this monkeypox virus and gives your body a chance to actually heal. So you're looking at 1240. I'm not so sure you can wait for that 1240 number. See what happens. We're trading up and down after hours. Here's the post after hours, and you can see that 1281. I'd watch that. The other thing you can always do if you're trying to get in names like this is just go and take a look at the 15-minute and see if there's another spot to get in. And there was. This is one that we actually did in the trading room. You see that line right there? There you are at 1090. It's pretty clean. I mean, you don't really need to do much more with this. You can see these levels very clearly, right? So 1077, and you can see them. I like this system. I'm working off a new system tonight. Let me know what you think about it. Comment below if you like this better than the other one that I was using. I'm just going to try it. There's some functionality to it that I like a little bit better. So we're just going to see how it goes. But overall, I like what I'm seeing here, and I think that this can continue next week. The more cases of this spiral, you're going to want to see countries stockpiling this, and I think that's what's going to happen. Where could it go? Well, it's got a long way to go. I mean, this can really go to a lot of different places. There's nothing but blue skies above us. So really what you would be looking at doing is just assuming that, maybe you could think about it going to, a fib level, right? So we could always just take a look at this and say, fib level makes sense. To see if we can get to one of those. And let's look at a fib retracement here, and just if we use this high and then come across here. I kind of like that. I kind of like how all the different colors. So it really highlights. So I mean, this would be your first. If you're using this close and you're assuming you're not your first level, you're looking at 1784. I mean, this makes the numbers really clean, very easy to see. So I like that from that perspective, but there's other things that you really need to take into account right now that are going on out there, and we're all aware of these, like KSS. Blow up, right? Walmart, blow up. I mean, I'm not telling you anything that you're not aware of, right? You're aware of all these blow ups. You've seen them all week long, right? Retail's dead. If you look at retail and you look at foot traffic, you'll see that foot traffic's down double digits across the board. So you can see that was your line. I am looking at actually buying this one. I like this idea. Now that I have this up, this is Walmart. It's a little different using this one, right? Because I don't have the big watermark in the middle. I don't know how people are going to feel about that when they're watching on their mobiles, but this is Walmart WMT, and you can see it right here. So maybe I don't need the watermark. Comment on that too. Do I need the watermark if I'm using this system or not? It's helpful to me when you comment. But you see how you have this doji forming? We all know what dojis are. Long-legged dojis are signs of uncertainty, and they usually mean a change in trend. This is a massive move down for this stock, one that we have not seen since 1987. And while I'm not saying that the market's going higher anytime soon, that's an enormous move. You're going to tell me 20% Walmart, they just lost 20% of their value? It's kind of crazy. So that's on the list too, but let's just keep going. I kind of get the themes. Okay, Target, this got absolutely destroyed. We see this all the time, down 1, 2, and now we could bounce back up. Do I think we're getting back up to that level? No, I don't think we're getting all the way back up there, but I think that you can, let me show you that. So, but do I think that you could make a higher high and then you could go from there? Yep, I do. I think if you flip this high and you flip the 155.80 level, you could absolutely see this trade back up, even up to 168. So there's definitely a trade there. And we're focused on retail for a reason. So Now you have this one, right? Next. These are the next ones that are going to come out with earnings. So Nordstrom's comes out next week, and that's something that we should really focus on. How are you going to benefit from Nordstrom? Well, we already know that with earnings coming out, foot traffic's down. So I would imagine that this is going to have a really bad quarter. Now, if you take a look at earnings, we are coming out with JWN on the 24th. And if you just take a look at news right here, their expectations are very low for this. So, I mean, this analyst is already coming out and saying throwing in the towel. Expected to issue inline or weak guidance for 2022. During its retail outlook did not improve. Now, you can actually go and look and chart what's going on with their traffic, the foot traffic at these stores, and it's down double digits. So this can absolutely blow up. I mean, he's maintaining the company's sell rating at a $12 target price. I don't see people going to a lot of these high-end stores right now and shopping. So I think this might be the next one to blow up. And again, we've just had blow up after blow up of these, right? I mean, look at Ross today. That was today's disaster du jour. You've had Target, you've had Walmart. Yes, there might be trades there on the long side, but just kind of keep this in mind when you're looking at them. I think that there's more blowups out there. Retail, we're waiting for this recession. I hate to tell everybody you're in it. It's pretty evident. So I would focus on that. You know, if you want to focus on retail and the blowups, it depends on you how you want to play them. It's very difficult to just buy them going into the quarter. I know that, but you look at KSS, you know, it doesn't happen in a day. Just because it went up yesterday doesn't mean it's going to go up the next day. And we can see that with KSS here and what transpired there. And that's how these move. So, it's interesting because I'm currently short this. They're not going to go down every single day just because you want them to go down. And so what you should be doing is you should be utilizing when they run up to put on positions. This was easy to put on a position on this stock today. Let me actually show it to you this way. It might be a little easier to show it on a 15-minute. I'll just do a 5. And let's open this way up. So let's just talk about this for a minute. What you're really looking at doing is just looking for spots. You're just trying to pick your spots in order to get in these trades, right? So this was pretty evident that when you got near that higher high, that was a great spot right here where you could have got involved with it. So, I mean, that's really what you're looking for. You're looking for peaks like this. And when you have those, you could put those shorts on. You could actually say that this would right here, and then here would also be your head and shoulders pattern. Kind of like these drawing tools, not going to lie. So, something to think about. And then you can just kind of see where you broke the neckline, and that was the end of it, right? I mean, right here, I'll just put it in. So if you use that as your neckline, you could also have used this, and you could also have just keep on going. But either one of them clearly puts you in a position where you can see, and you can see how they acted when they got to those levels again, where you could put that short back on, and that's what you're looking for. So you just kind of want to drill down into these sometimes. But overall, I still think this is a short, but I would wait, watch, and see now. You sold off so much today. I can't stress this enough that you have to wait for the right time. You have to wait for these to actually set up. They're not going to set up every single day. There's not a trade every single day. Now, if we look at Tesla, this just broke drastically. And that's something that, it's irrefutable. We don't even need moving averages for any of these charts. And I want to show you something about the moving averages in a minute. But I really wanted to go over thematically what was going on. Thematically, retail is done. It's toast. The names that I went through, go back, take a look at those levels. They're really important. But see, when you see like these big names like Tesla blowing up, like everyone's like, oh, it's time to buy Tesla. Is it? Okay, we're still not even back to where we were, not even remotely close to where we were after the split. So the peak of the split before we ran up again was right here. You're not even there yet. So keep that in mind. It's definitely something that I would consider. Like, I think 504 is very realistic. For people that think that you can't get there, I don't know why you would think that way. I think that's pretty easy for us to see that level. So something again to think about. Let's get rid of these lines and we'll go from there. So I think it's pretty easy to see that, and I don't see any reason why you wouldn't be able to get there. I really don't. I mean, we don't need moving averages. We know what's going on. We know it's below every single moving average. I don't think this is because he tried to buy some woman a horse. Whether or not he did or didn't, I really could care less. but just the PE of this is through the roof. And when rates are going up, this is what's going to happen. So that's just something to think about. But you're seeing it everywhere. Apple has issues. Apple has real issues, and people aren't really getting this. And I want to just talk about it. Like, you're holding right in this level, and that's great. And this is right where your support and resistance are. I really like this feature. I just have to get better with this charting system, but I do like it. Subscribe to the channel, click all notifications, because what we do go over here is timely, even though we're kind of winging it tonight with this new system. But you see what's going on right here? Now, why is this important? Well, if you think this is over, you're not getting it. So AMET came out, and I was shocked. This was one that we actually traded short in the room today. And I just think you have to kind of understand this. We did very well with it. We shorted it around 111, went down to 101 3/4, and that was kind of where we thought it could get to. So one of the key reasons that I thought that was, let's get down to a 15-minute and I'll show you. But one of the key levels, if you go back and look at pre and post data, this 101 is exactly where we got to last night. So by getting back to that level, all we did was just test a level that we were already at. So that really wasn't that much of a stretch to assume that that could happen again. So now the question is, why did it go down? Well, you don't even need moving averages. You're below all of them. But why it went down is because it missed earnings and revenue guidance. It missed the guidance. It missed its earnings. So I have slower growth, and I missed. So if I don't need semiconductor equipment manufacturing companies and they're not going to do well, what is going to do well? Well, no, it makes sense what China's saying about, phone sales and cutting back phone sales. So now all of a sudden you have groups of stocks that are going to come out with numbers like NVIDIA. And I really do, the more I'm talking, the better I think this call is going, just explaining things a little bit clearer instead of just picking names, which I still like doing. And if you want to follow along for more names, just follow along in the free newsletter. There'll be a link in the description. So you see this level right here? Okay. All I need to do is just focus on that. So now we have to think about NVIDIA and when are earnings. Earnings are the 25th. Now, just to put this in perspective, and I'm going to play devil's advocate here. I'm not suggesting it's going to happen. But what if NVIDIA guides lower? Or what if NVIDIA guides in line? Right? Semiconductors will get absolutely hammered. And that can happen. So this is another one that you want to watch for possibly shorting or going long next week. I mean, you have an H here. I wouldn't be either way unless I was up one way in it. And the only way that I would be right now would be short. But I most certainly would not be putting myself in a position to be long this going into earnings without knowing what those numbers are going to be. That's just crazy. You need to really understand where you are in the cycle. And, I'm not going to spend a lot of time on energy because if the market comes in, we'll all get hit. But understand that these are the types of companies you want to focus on. You want to look for the Nordstroms of next week, right? You want to look for the next Ross stores, the next Walmart. That's your job. That's what you should be doing. Energy, again, I'm not even going to use moving averages. We don't need them. You can see exactly where you're at. You should be able to get it. This is the best performing one of all of them. But there are some signs out there that, and I explained this to the trading room last night, and it actually served us really well today. There are signs out there that we are beginning the bottoming process, and let me show you a couple. So this is the NASDAQ comp stocks above 200-day moving average. Okay, so this is the NASDAQ. This is all the stocks that are in the NASDAQ and their percentage above the 200-day moving average. Now, what does that mean? Well, this is what it means. See these levels right here? You can see them very clearly, right? Right now, we're at a 15. So right now, 85% of stocks that are in the NASDAQ are below the 200-day moving average. Now, I have a 5-year spelled out here. The only time this has happened is one, the pandemic, which we can see, right? So we can see that right here. And then the other time is the end of 2018, okay? They're the only times that this has happened. Now, let's just pull this up so you can see that. What I want you to do is I want you to focus on what's going on in these circles. Now, we're going to overlay the NASDAQ with it. And I'm doing this for a reason because I want you to understand this. Once you broke below this level, you had about 10 days in here, okay, where you stayed below it all throughout here, right? It's roughly 10 days. On average, if you take these two together, I get roughly 10 days on average, okay? Obviously, 2020 was longer, and you can just see that just by what's going on. But what we're going with this is when you broke down through this level that we're at right now, okay, and you stayed down, we didn't just bounce. That's why I keep using the words we're beginning the bottom. You had a waterfall event when this happened. The same exact thing happened here when you broke. You were down for 1, 2, 3 days, right? Here it was about 2 weeks. So you can see the average of those. But you fell down more. You didn't just, hit it and go, we're back. So what I was saying yesterday and what we actually started to see today is I think that you could still be setting up for some kind of waterfall event. So I would be really careful out there. I think it's great that this is at this level and this is where we're at. And also the last to fall are your big leaders. And that's what we're seeing now. We're seeing Tesla collapse, right? We're seeing, I'm just going to leave the NASDAQ in there so you can see it. Tesla collapse, Apple's collapsing, okay? So as this happens and as these names collapse, that's exactly what you want to see to put in a bottom. Now, we can get rid of this, and let me just show you what else you should be focused on. Okay, the first thing you need to be looking at is your VIX. You need to kind of understand what's going on there. This is really troublesome to me, and I'll explain why. Okay, we're unable to even hit a higher high, even from yesterday. So the complete lack of panic that's going on here, and if I just zoom out of this, and let me just do it this way and get a trend line. So you can see this trend line, this is really where you want to be, right? So you can see with this trend line right here, every time you get down to here, you sell off. So yep, you could get back down here and then bounce off that 20 and sell off. What I'm having a hard time understanding is why are we not breaking out? Why are we not having fear? So in other words, when we've sold off last time, we had a lot of fear. So you see this here and here, right? You had a lot of fear. So we're not having anything like this. I really like this tool. I think it's very helpful, right? I mean, you're getting that, and this is where you're at. I mean, it's crazy. So I don't understand why we're not bouncing, but we're not. But look at this. This is the 10-year treasury. Now look what it's done. We can see this pretty clearly, right? You can see how you broke it, tried to rally back, failed, broke down. Now let's zoom in on this. Guess what you made today? You made your first lower low. So that means they're buying bonds. Now, if you tie the 10-year to the S&P, you can see this very clearly right here. See how you broke down right here? See how this is rising? So these are the levels you want to see. Why am I showing this? Well, from the moment that we started selling off, if you look at this level right where I'm at, okay, from the moment the 10-year started selling off, we started dropping. All right, so when this starts to rally, we could put a bottom in. And that coincides with what I showed you earlier, how we were looking at these lows that are in and what that might mean. Now, no one's going to ring a bell. It's never going to be that clear, right? It's never going to be that clear. And you can just see where you're at with the NASDAQ in regards to it. No one's going to ring a bell. It's never going to be that clear. But what I am saying is you need to see some level of capitulation. And until that VIX gets over 40, we just don't have it. So that's all I have. Please comment on this and what you liked about this tonight, what you didn't like about it, so I can try to make these videos a little bit better. I really do like this system a little bit more. If you're more interested in specifics on the videos and stock ideas, subscribe to the free newsletter. That's a great way to follow along with what we're doing in the trading room. Everybody have a great evening and have a great weekend, and let's get back to it on Monday. Trade to win.